And in our top business story, driven by an 8% jump in Dubai government spending, the consolidated public spending in the UAE is projected to rise by 3% in 2015, according to the Institute of International Finance. The IIF is leading global association of close to 500 financial institutions from more than 70 different countries. According to a local report, the organization stated that while the UAE looks resilient to the recent drop in oil prices, the continued growth in spending, even at a slower pace than in recent years, combined with the flat oil production, would raise the fiscal break-even price of oil to $78 billion. The Washington-based institute said that the consolidated fiscal balance will shift from a surplus of 6.7% of GDP in 2014 to a deficit of 4.3% 2015. In Abu Dhabi, according to the IIF, the government will continue to make significant new investments in the oil, gas and aluminium industries, even while current spending declines slightly. This is coupled with increases in power and water tariffs, reducing subsidies and transfers from 3.3% of GDP in 2014 to 2.2% in 2015. In Dubai, major projects and the preparations to host the World Expo 2020 should help to maintain strong growth of about 5%, with expected inflationary pressures to subside due to lower import prices and a further modest decline in real estate prices, which could stabilize housing costs. The rise in the 12-month CPI inflation rate to 3.7% in January 2015 was driven by housing costs, which rose by 7.5%. Demand on infrastructure at Abu Dhabi International Airport will be at a critical level by the end of next year, when annual passenger numbers expected to reach 27 million. That's according to the chairman of Abu Dhabi Airports. Ali Majid Al-Mansouri was quoted as saying that the airport is expected to handle between 23 million and 24 million passengers this year at its 3 existing terminals, compared to 20 million passengers last year, and will come just as the new midfield terminal will be ready to open in 2017. Al-Mansouri added that between 60 and 65% of the midfield terminal would be completed by the end of this year. To accommodate the increase in traffic, the airport has been undergoing a 1.5 billion dirham capacity enhancement program of its existing terminals. Designed to improve efficiency and passenger flow at Terminal 1, the first phase of the program included the installation of X-ray machines and 350 meters of walkways connecting arrival gates to immigration and flight transfer facilities, and the free movement of arriving passengers transferring to Terminal 3. 9 wide-body aircraft stands have also been added, while a new road network is also expected to be completed within the next month. Dubai Chamber of Commerce and Industry recently signed a memorandum of understanding with Dubai Airport Free Zone to join its e-commerce initiative, which was launched by Dubai Chamber in collaboration with the Alibaba Group, China's leading global e-portal. The MOU will support efforts to enhance international trade by promoting e-commerce, as well as the opening of new markets for DAFZA's members. The agreement was signed by His Excellency Hamad Bouamem, the President and CEO of Dubai Chamber, and His Excellency Dr. Mohammed Al-Zuruni, the Director General of the Dubai Airport Free Zone Authority. Commenting on the agreement, His Excellency Bouamem stated that the method of traditional trading is giving way to the concept of online trading, adding that today the UAE is ranked as the largest e-commerce market in the GCC region. According to Dubai Chamber statistics, based on PayPal data, the size of the UAE market is expected to reach $5.1 billion by the end of 2015. Dubai Chamber has earlier signed MOUs with Ajman, Ras Al Khaimah and Fujairah Chambers, as well as Makkah Chamber of Commerce and Industry, to grant portal access and benefits to their members. Dubai Investments PSJC has announced plans to diversify its portfolio with more focus towards education and healthcare sectors to build on its achievements over the last 10 years and support its growth ambitions. During a ceremony to mark the 20th anniversary of the investment company, Khalid bin Kalban, the Managing Director and CEO of Dubai Investments, announced that much of the focus for the coming years will be towards developing the infrastructure at the Dubai Investments Park. The company announced that it will invest towards a $60 million project to build a hospital in the Emirate, which will go along with the $50 million investment towards building the first overseas campus of the Beirut-based University of Bournemouth. Furthermore, Khalid bin Kalban announced that their next milestone project will be to establish the 11,000 square meter Riyadh Investment Park in Saudi Arabia, adding that the company already owns 25% of the land to build logistics and manufacturing facilities. As per the performance figures, the company has posted a net profit of 1.34 billion dirhams in 2014, registering a 63% growth over 2013 figures. Net operating profit for the year 2014 stood at 1.76 billion dirhams, witnessing a 42% rise over previous year figures. According to Khalid bin Kalban, the figures reflect the company's achievements over the last 2 decades, as it started from 650 million dirham capital in 1995 to its current stage with equity levels at 10 billion dirhams and total assets valued at 14.52 billion dirhams. With numerous real estate projects in the planning, coupled with plans to develop a hotel in Fujairah over the coming years, it was added that the future looks promising.
We'll be investing in real estate projects within UAE for in the coming maybe 5 years, about 7 to 8 billion dirham. We have now established a company in Saudi Arabia called Dubai Investments to replicate our flagship company, which is Dubai Investment Park. So those are, we talked about the past. The future is promising. We're focusing on growing our balance sheet, growing our profit, and hopefully distributing a higher dividend to our shareholders. We are taking our know-how, management skills to different jurisdictions, and I think this is something that we wanted to do a long time ago, but never late. It is now. Those are promising investments, and we're carrying through with our plan.